Could be impeachment day, Wednesday, December 18th. My youngest son's birthday. He's 9. Happy birthday, Vinny. Now, most importantly, on this impeachment, shouldn't affect the markets. Markets aren't concerned about it. They're making all-time highs pretty much, up, and away. If they do vote on this impeachment, comes out of the House, I don't think it's negative. If we might close all-time highs, and that'd be the news. President was impeached, goes to the Senate, stock market closes all-time high. Could there be some bearish reaction? You always are prepared for that, but this is expected to make it out of the House. The surprise is if the Democrats don't get 217 votes, might be a relief rally in stocks. But that's not going to happen. That's why they call it a surprise. Let's get into the highlight of today, though, and just keep it to the NASDAQ because it had a nice head fake pattern that I might not have seen, but someone in the room predicted the downside, and then that caught my attention. And when it started coming back, I said, if it gets above 23.5, there could run it, and it's a head fake pattern. So this is the NASDAQ, just a simple point and figure chart, 10-tick reversal. You're watching it. This is the upper right. You could see this is a consolidation box, and that's what we look and teach people how to read a chart right from the beginning. Box, where's the fight? There's a bigger fight like in here, and it always matters where the middle is. So this is a box that you see that has formed, and again, this is this morning at around 8:45 or so Central Time, so about 15 minutes after we open up. There's that dip. And so let me stop it. Did I miss it? Let me stop it there. So here's the box. Here's the dip. And what happens on a move lower out of a consolidation area? You get momentum shorts all excited and sell it, sometimes late. And you get longs that were long up in here that get stopped out because it got outside the consolidation. When you stop out longs, they're no longer trying to sell it above. They're out of the market. When you get momentum shorts excited for a breakout, you get more shorts, therefore more buyers. And I've taught this and talked about this over and over and over again, and I could say it another 10,000 times in the next 10,000 days, and it would be worthy of understanding, because this is the why and the dynamic of why markets do what they do. If you have less longs, you have equals less selling. What are you doing when you're long? You're trying to sell it, hopefully above the market for a profit, but you also have a sell stop. So if you get stopped out, you're no longer long. If you're no longer long, you're no longer a seller. Okay? If the market's going sideways and that starts to jump down, you get a lot of shorts that say, ooh, let's get short. Maybe they do get short there, or they get short late. So if you get more shorts, you have more buyers. What do you try to do when you're short? Buy it lower, hopefully for a profit. But if it doesn't go lower, you're still a buyer. So when you have less longs, cross them out, you have less selling above the market. And if you have more shorts, you have more buyers in the market somewhere sneaking around. So in this head fake where it goes sideways, it's going to go down, oh, it's not, boom, and then it comes back up. The middle of the prior consolidation creates a chance to have momentum because you just put a lot of buyers in the market and you made it easier to go up because there's less sellers above, less longs, less sellers. Now, in order for this head fake, sometimes it just moves and breaks and keeps going lower, right? So it's got to come back into this consolidation, and what it does is it creates like shorts that get short, get grapefruit eyes. Oh, no, right? And now they become anxious buyers. Now the longs were mad from before because they just got shook out. They were long. Oops, stopped out. Then it comes back and they're pissed. I get out and then it goes up. How many people get out, get stopped out, and a lot of times then it goes up? As soon as you stop yourself, that's because you were long with too many people. It's a shakeout. So the middle of this consolidation is important to run up. And I had said the middle of this consolidation here, this is what it looks like in a real-time chart, was about 23.5, right? Watch what happens when we start to move through 23.5 in the NASDAQ. Look at the upper right of my screen share. Getting an update that here's 23 halves, 23 halves, 23.75, 23 even, 23, and a tick here and there in the NASDAQ is nothing. Starts to skip up a little bit, comes down a point. It just got through 23 out by like a tick or two, 24. Watch as it gets right, but that's 23, gone. Now, Someone just updated me. If you're watching this today, December 18th, 7 p.m. Eastern, 6 Central, the vote's expected. As soon as they crept above 23 half, 24 even, gone. Now, that is important because of what I just mentioned when I draw it up. When you have a consolidation box, let's just, for illustration purposes, say that's what consolidation box looks like. You dip lower, you get short, and now they're buyers, and now they're pissed because it just went up to here. Longs, a lot of longs are shook out on the move lower, so there's less sellers above. And if there's less sellers above, it's an easier path to go up. Let me show you this to make it kind of neat. This is the move lower out of the consolidation box, right through those lows. When longs get shook out, let's pretend like each one of these dots is a resting sell order in the book above the market, correct? Those are resting sell orders from people who are long in here. When the market comes down like this and longs get stopped out, what happens is those dots of resting sell orders get canceled. They go away. So it makes sense. It's easier to go up because they're not in the way. I'm telling you, if you never heard this saying, it will do to you what it's done to a lot of people. After you buy it, you're a seller. After you buy it to get long, you're now a seller. So is everybody else. Good luck. The impeachment not supposed to happen until tonight if you're trading this live or listening to this on December 18th before 6 p.m. Central. It's not going to shouldn't have too much market moving effect because it's priced in. Right now, the market's kind of grindy, lighter volume, holiday stuff. The driver of U.S.-China trades kind of take a passenger seat for now. There's not as many opportunities, but there are opportunities. Keep your powder dry. Don't have as big of expectations in a wide-ranging day with a lot of volume because we're not getting that even coming out of the overnight markets. And don't let anything surprise you. The big surprise would be they don't have the 217 votes coming out of the House to send the impeachment to the Senate. The market might have a relief rally, but the market obviously knows this impeachment's been going on. They know that there's just almost an automatic chance it's going to pass. And look where we're at on the map. Good luck. We'll see everybody tomorrow. Manage that risk before you take it.